Good evening. Welcome, everyone, and thank you for joining us tonight. I am Joanne Hermiston, and presenting with me tonight is Becky Cruz. In the back room, we have Ira Smilovitz and Justin Schell answering questions. Now, before we begin, if you happen to have your Club 1099 form already, you might find it useful to have it available and refer to it as we go through the presentation. We're going to cover a lot of information tonight, including e-filing your club tax return and e-filing several state tax returns. We will post it all for you to refer to later, so don't feel like you need to memorize everything we say or take a lot of notes. Also, you can find a link to the handouts in the chat section, and you can also find a PDF available under the materials. But for any club-specific questions, please send us an email at support@bivio.com. Now let's get started talking about taxes. If your club has income, the IRS wants their share. We need to follow their rules on how to track and report it and pay taxes on it. Your investment club is a partnership, and the tax form you file is called a 1065 form. It is what is called an informational return. Your club does not have to pay taxes directly. All of the income and expenses are divided up between the members, and they report and pay taxes on their share on their personal tax returns. They know how much or how little to report because you give them a form called a K-1, which is also part of your taxes. It shows each person's portion of your club income and expenses. Some members may also get a K-3 form showing information they need if they report foreign income on their personal taxes. You send in all the K-1s and any K-3s with your club tax filings. Each member's copy tells what amounts they need to report on their personal tax forms, because that is where the taxes get paid on your club income. Now, who has to file? Well, you do. If you have an EIN number, you need to file club taxes because the IRS computer will be looking for a filing from you. It does not matter how long your club has been in existence or how much income you have had. The timeline you will be working with involves these dates. This year, your club taxes need to be filed by March 16th, 2026. That means they are due a month before the April 15th deadline for your personal taxes. Some of you may have state or federal filing deadlines extended if you happen to reside in certain areas where disasters are declared. You will not be able to do your club taxes until you have received the 1099 forms, which are sent by the financial institutions to you and to the IRS to report your income. Financial institutions are supposed to get them to you by February 15th, but some have requested extensions until the end of February. Most brokers have posted when you might expect them on their websites. If you file late or not at all, or you file forms with missing or incorrect information on them, there's a stiff penalty. It is $255 for each month or part of a month, up to a maximum of 12 months, that the failure continues. That's multiplied by the total number of persons who are partners in the partnership during any part of the partnership's tax year for which the return is due. Plus, there's a minimum $340 penalty for each failure to furnish a Schedule K-1 or K-3 to a partner when due, and or for each K-1 or K-3 on which there is missing or incorrect information. This adds up quickly. Each year we get questions from clubs that have received tax bills for thousands or tens of thousands of dollars because they have failed to meet these requirements. Now, one way you might avoid penalties is to submit an IRS extension request. Filing an extension allows your club time to submit or resubmit your tax return up until September 15th of 2026. You can e-file your 1065 federal extension request using bivio for no extra charge. Extensions are included in your bivio subscription. We recommend filing an extension as a safety net for all clubs, but especially for clubs that do not opt out of CPAR, the Centralized Partnership Audit Regime. This is useful if your club receives a late or correct a 1099 from your broker, or find something else that needs to be fixed. To begin, go to the bottom of the bivio taxes page and click the Authorize e-filing of IRS Form 7004 link at Need More Time. You'll review your club details that bivio automatically entered on this 7004 form. Confirm your club's name, address, and EIN number are correct. Make sure the code 09 is there. It is for the extension for a partnership return form 1065. At the bottom of the page, read the consent, then type your full name and click to confirm that you agree. When you are ready, click the link to authorize bivio to electronically submit the club's extension request. The e-filing process will begin, and it can't be undone. You will then see this notice on the bivio taxes page after the Form 7004 extension application is accepted. Click to download and print the submitted extension document. It is important to click to download and print this page as proof of acceptance. If your club is required to also file a state tax return, be aware that some states require you to file a separate extension directly with that state. Whether you file an extension or not, the good news is that there are only a few easy steps needed to prepare your taxes. You'll find the steps by going to Accounting, Taxes, and make sure to select the 2025 tax year. As you can see here, there are steps you will follow to guide you through the tax preparation process. There are 8 steps in total. To prepare correct taxes, you must do each one before you continue to the next one. You need to do a club audit as your first step. Verifying your records is critical. If your bivio records are not correct, your taxes will not be correct. You cannot just assume that the information in bivio is correct, even if you use account sync, and even if you check your cash balances and number of shares of stock each month, like we recommend. There are other parameters affecting your accounting and correct tax reporting that would not be covered in those quick checks. You won't find them unless you do the audit we recommend. There is a reason there are 8 steps shown to prepare your taxes. You do not want to skip any of them. Without an audit, you will not know 2 main things that affect your taxes. First, that the income your club has earned during the year is being reported correctly. And second, that your member accounts are being tracked correctly. If they are not, then your club income won't be divided up amongst your members correctly, and that will make their personal tax reporting wrong. We've prepared a form you should use to guide you through the steps of an audit. The link for Tax Step 1 takes you to a page with a link to the form and a presentation about how to use it. I do want to highlight Step 2 of the audit because it contains 2 critical checks that will tell you right off the bat whether you are even close to ready to prepare your taxes. This is to verify that your closing balances are correct in bivio. You do this using a bivio valuation report and your end of year statements for each of your financial accounts. First, check that the cash balance shown in bivio as of the end of the year agrees exactly with the balance shown on each of your account statements. Your club may have just a brokerage account, or it may also have a bank account. The cash balances for each account listed on the accounting accounts page should agree to the corresponding account statement as of the end of the year. You should not see balances for accounts listed that you don't actually have. Then you compare the number of shares of each stock you own, first on the bivio valuation report, and then on your brokerage statement. The bivio account should show exactly the same number of shares that the brokerage account does. I can't emphasize this step enough. It is a critical point. If the cash balances in bivio do not agree with the cash balances shown on your financial institution statements, and you don't have a valid reason, such as an outstanding check for this, or the number of shares of stock shown in bivio does not agree with the number of shares shown by the broker, go no further. You need to stop and find and fix the problem. Your taxes will be prepared using the bivio accounting information. There is no point in going any further if it's not correct. In fact, if you're a club member, you should make sure that your treasurer can demonstrate that these things agree. All club members are responsible if your taxes are filed incorrectly. The bottom line is this: your taxes are prepared from the information you've entered in bivio. Unless you do an audit and verify it is correct, your taxes may just be garbage in, garbage out. That is why you need to do step 1. An audit can be done at any time once your December 31 brokerage statements are ready. It will verify that all of your accounting records are correct through that time. Even after you do an audit, there may be some last-minute changes that are reported on the 1099 form you will get from your broker that you need to adjust for. You will not know what they are until you receive the 1099 form. Steps 2 and 3 guide you through doing this. Before we get into the specifics of doing this step, let's review what a 1099 is. A 1099 is a form that your financial institution sends to the IRS telling them how much taxable income you have made during the year. They also send a copy to your club. Now you should get a 1099 for each broker your club had during 2025. There are many types of 1099s. Income from your investment activities will probably show up in one of 3 different types. A 1099 INT will report your interest income. A 1099 DIV will report your dividends. And a 1099B will report your stock sales and your capital gains and losses. In addition to those things, you may find supplemental information such as foreign company details that you will need to report your taxes correctly. Now, what do you do with your 1099? Since the IRS will be matching up the information provided to them on the 1099s with what you report on your taxes, you need to know your bivio records agree with them, or you have a valid reason for any disagreements. Brokers do make mistakes on 1099s, but if something differs from your bivio records, you need to investigate why. You may have differences even though you've done an audit. Some tax information doesn't come through until you receive your 1099s. When it does, there are details that you might need to fine-tune to make sure your income is reported correctly. These changes will not be done automatically for you by AccountSync. You need to do them during step 2 and 3 of the tax prep process. The changes you might need to work on might include things like money market dividends classified incorrectly. We tend to think of distributions from money market funds where we park our cash as interest, but in many cases they are actually dividends. You'll need to make sure they have been classified in bivio the same way your broker shows. Dividend dates. Sometimes dividends which your broker credits to your account in January are reported to you as previous year dividends. If a company doesn't have sufficient earnings to support a dividend, income that was originally reported to you as a dividend will be reclassified on your 1099 as a return of capital or non-dividend distribution. This requires a manual adjustment to your bivio records. You might also have an investment where you will find that not all the dividends you receive can be considered qualified dividends. In this case, you will have to adjust the dividend entries that were made during the year and split them up into the different types of income that the broker shows. You might find a wash sale you triggered by buying a stock too close to a sale that you had, which resulted in a loss. And you might own foreign companies where you need to adjust the country code associated with them or the percentage of foreign income that they pay. Many of these things you won't know about until you get your 1099, but they all require adjustments to your bivio records to produce correct taxes. The adjustments will not be made automatically for you. We'll be going through how you address them later in this webinar. Okay, so before we get into how you do these dividend checks and adjustments, let's talk about a subject that often raises questions. You may see notes on your reports referring to qualified dividends. What are those? They are a good thing. They qualify for a reduced tax rate. For most people, they are taxed at a lower long-term capital gains rate rather than at ordinary income rates. There are 3 requirements for a dividend to be considered qualified. Only U.S. and certain foreign companies can issue qualified dividends. Only certain types of dividends are qualified. Dividends from money market accounts are usually not. Neither are most of the dividends from REITs. The holding period. You need to have owned the stock paying the dividend for more than 60 days during the 121 days that begins 60 days before the ex-dividend date. So what is an ex-dividend date? When a dividend is declared by a company, they also specify that it will be paid to owners of record as of a certain date. The stock exchanges determine who these are by establishing an ex-dividend date. It's usually 1 business day before the record date. If you buy and own a stock before the ex-dividend date, you get the dividend. If you buy it on or after that date, you don't. Bivio checks the holding period based on the ex-dividend information entered when the dividend was recorded. It's important to understand that brokers are not required to run this check. All they have to do is to tell you if a dividend is eligible to be qualified. And you might find that this will mean the amount of qualified dividends reported by Bivio is different from what your broker shows. If you see differences, make sure you know why. But if there's a good explanation, it is okay. Now in step 2, you will be answering questions and making comparisons that will ensure that your broker information is reported as your broker shows on your 1099. As we were just discussing, information on the tax classifications of dividends often doesn't show up until you receive your 1099. If the information on the 1099 is different than what was initially entered in Bivio, you need to make adjustments to it when you do this step. There are 4 different things you need to do during this step. First, you need to check that the interest entries shown in Bivio agree with what your broker shows on the 1099 INT. Second, you need to make sure you've identified the investments in Bivio that don't pay 100% qualified dividends. Third, you need to make sure that the total amounts and the dividend classifications agree with your broker and make any adjustments needed if they don't. And fourth, if any dividends paid by foreign companies or ETFs or mutual funds that hold foreign investments, for those you'll need to make sure that the proper country is identified and enter what percentage of the dividend is foreign income. Next, we'll show you how to do each one of these steps. When you select step 2, a page listing all your interest and dividends opens. At the top are all the interest transactions you've entered in Bivio. The total shown for this section should equal the total interest reported on your 1099 INT. If it doesn't, you may have money market dividends entered as interest or vice versa. Use the edit link next to an entry if you need to adjust its classification. At the bottom of the page, you'll see a list of all the dividends you've entered in Bivio. First, make sure that in the column labeled 100% qualified dividends, that you see a yes for all stocks that pay 100% qualified dividends, or that you see a no for those that do not pay 100% qualified dividends. There should be a no for investments like REITs, ETFs, and many mutual funds. If you see that any of the dividends on your 1099s have been reclassified into different distribution types, you should see a no in this column. Here's what you might see on your 1099 that tells you to select no. As you can see here for this ETF, the total dividends have been split into ordinary or a non-qualified portion and another portion that is eligible for qualified status. So this ETF does not pay 100% qualified dividends. Now here's another example of dividends where not all the dividends were qualified. To change what is shown in Bivio to indicate that not all the dividends are qualified, click on the yes or no shown for that investment. It is a link that will open this page. Select no if the company does not pay 100% qualified dividends. Next, you need to check that the total dividends shown for each company agrees with the broker. In Bivio, you'll see your dividends listed by company. Most brokers provide a corresponding detail list on your 1099 that you can compare this against. We'll look at that in a minute. You'll be able to do a quick initial check by comparing the dividend totals for each company to what is shown on your 1099. If the totals don't agree, you can compare each detail to determine where the discrepancy lies. If you need to make any changes, you can find a direct link back to your records to edit the transaction. You'll be checking the bivio information against dividend detail information that you could probably find on your 1099 DIV. Many look like this. You can see it is very similar to the bivio review page. You may find your 1099 DIV looks a little different from this, but it will have the same information on it, just a little different format. In any case, this is what you do. This is where you get the dividend totals to compare to the bivio report. If they don't agree, compare the individual dividend dates and amounts with the bivio report to start to work through where your problems lie. You'll need to fix them before you finish this step. If you have made investments in stocks such as REITs, or any of your stocks had some issues in the past year, you'll probably have some further work to do. What you need to be concerned about is information like the entries for this company, where some of the distributions have been classified as something other than dividends. In this case, some of the dividends that were paid by Annaly Capital Management were reclassified when they closed their books for the year. They are now shown as Section 199A dividends and non-dividend distributions. If you own REITs, you will see their dividends reclassified into as many as 5 different categories. When you see this, you'll have further work to do in step 2. To update bivio, you need to find the stock in question on the bivio 1099 DIV review report. You should have entered a no in the 100% qualified dividend column in the previous step. Adjust if necessary. When you finish with that, select the edit link next to the first dividend that needs to be adjusted. Here are the 2 parts this first dividend was divided into. The edit link opens the dividend entry form where you can split the entry into each of the components shown on the 1099. The total of the 2 should still be the same as the original total dividend amount for that date. Making this adjustment to reclassify your dividends is very important. The non-dividend portion is not taxed to you during the current year, and it affects the cost basis of your shares. The Section 199A dividend also may provide you with tax benefits. If you don't make the entries, you will overpay on your taxes during the current year, and your cost basis will not be correct when you sell your shares. When you return to the 1099 DIV review page, you will now see 2 entries in bivio for that distribution, just like your 1099 shows. You should continue to make adjustments until all the reclassifications have been made in bivio. A dividend may be reclassified into between 2 and as many as 5 different categories. You'll make all the adjustments in the same way as I just showed. You won't know these breakdowns until you get your 1099s. In fact, your 1099s may be delayed, or you may receive revised ones late in the tax season. Since you can't prepare your taxes correctly without reclassifying your dividends, it may delay your filing. This delay and the extra work of splitting up each of your distribution entries into several parts is one of the reasons we advise clubs to avoid owning and investing in REITs. We find many clubs that own them have a lot of difficulties completing this step. If your club doesn't own any REITs or ETFs, you probably won't have to worry about making these changes because you'll find that each dividend you've received is just being reported on your 1099 as a qualified dividend. Another thing you might find on 1099 DIVs that will require an adjustment is this. Sometimes a dividend is received and entered in bivio with a date early in the new year, but it shows up on your 1099 as reported during the previous year. For example, in this case, all the dividends have a 2017 date on them except the last one. Even though it was received in 2018, it is reported on your taxes as a 2017 dividend. You're pretty much guaranteed to see this if you own REITs and many ETFs. When this happens, you won't see the dividend listed at all at first, on the bivio 1099 DIV review form, and your dividend totals for the affected stocks probably won't agree with what your broker shows. To correct this, you'll need to adjust the date on the January dividend entry in bivio by doing this. Leave the tax program and go to Accounting Investments. Click on the name of the stock paying the dividend. Select Edit next to the entry affected and change the date on it to 12/31 of the reportable tax year. You can then return to step 2 of the tax prep process and continue. You should now see the dividend listed on the 1099 DIV review form, and the totals for the company in question should agree with the 1099. The final part of step 2 is where you'll address any foreign tax reporting issues. On the bivio 1099 DIV review form, the country shown in this column labeled country code should be the country where the company that has issued the stock is incorporated. You should have a country other than US identified for any stocks where you see foreign tax withheld on your 1099. But you may have stocks or ETFs that pay foreign income that don't have foreign tax withheld. You may find a page similar to this in your 1099 that lists income from foreign companies. For example, this club received income from BP, which is a company incorporated in the United Kingdom. You need to know the country of incorporation for all your investments. It may or may not be on your 1099s. If you don't see the information on your 1099, then you'll have to do some research. You can find a help topic on our help page called Identifying Countries. It explains how to use the SEC Search Edgar site to find the country of incorporation for your investments. If you have ETFs or mutual funds that pay some percentage of foreign income, make sure that RIC is entered as the country code. RIC stands for Regulated Investment Company. If you need to change the country code, here's an example of how you do it. US is listed here for BP. From your broker's 1099, you know that BP is a United Kingdom company. So what is shown here should reflect that. To fix it, click on the 2-letter country designation here. It is a link that will open this form. At the top is where you select the country that your broker has indicated. In this case, it is United Kingdom. After you select the country, you will see a new box where you'll need to enter the percentage of the dividend that is foreign income. For a stock for a single company like BP, this will be 100%. After you accept the selection, you'll be taken back to the form and you'll see that the symbol for the United Kingdom has been filled in. It is UK. If you own ETFs or mutual funds that have foreign income, then you need to select RIC as the country during this step. In this case, it may very well be that not 100% of the income comes from foreign sources, so you'll need to change the percentage. You might find what you need to enter on the 1099 form, or you will need to go to the investor relations pages on the ETF fund company's website to find it. If you follow our guidelines for keeping your club accounting simple, there's a good chance at this point that you will have found all of your investments only pay qualified dividends. All of the dividend totals agree with what the broker shows. All of the dividend categories agree with what the broker shows. All of the reporting for any foreign companies agrees with what the broker shows. If that is the case, you'll be done with step 2. However, if you find certain things on your 1099, you will have very complex issues to address. For example, if you own commodity ETFs such as SLV or GLD or Bitcoin trusts, these are actually investments in a commodity such as gold, silver, or Bitcoin, not in stock. Each month, some of the commodity, in this case silver, is sold to pay expenses. These sales mean many calculations you must make manually and many adjustments you must make to your bivio records. There are manual adjustments to your tax forms required also. Unless you want to spend lots of time and you're very comfortable doing calculations and making accounting entries, then you will not want to do what needs to be done if your club invests in these. Finally, if you see information like this one on your 1099, you have a big problem. You've received income which is classified as a partnership distribution. This requires major adjustments to your club accounting and tax reporting. Unfortunately, handling these things is beyond the scope of the services provided to you by bivio. You will not be able to file the bivio tax forms as produced. You will need to get outside accounting help to get your club taxes done for the year. So that is what you need to do for step 2 of the tax prep process. This is a very important step for you to complete, so make sure you don't ignore it. Many of the cost basis problems clubs have are because they have neglected to do dividend reclassifications that were shown on their 1099s. If you find this step hard to do, just remember that you pretty much control whether or not you have to do it. Those clubs that follow our guidelines for keeping their club accounting simple by staying away from investments in digital assets, crypto ETFs, commodity ETFs, REITs, or partnerships can just breeze through this step quickly because they probably won't have any reclassifications or other issues to deal with. Note that you can do this step now if you have your 1099 forms. The 1099 INT DIV review report that you use to do it is available to you on the accounting reports page. When you finish the second step and have finished comparing and correcting your dividend entries, click Next at the bottom of the page to return to the tax prep screen. You'll see that step 3 is now showing. It also involves comparing a bivio report with a 1099 form. In this case, your 1099-B, which reports your capital gains and losses. Just like dividends, we have a review form that looks similar to what you'll be getting from your broker that will allow you to do this. You can get to it from this link. The form looks like this. It is designed to resemble what your broker will be providing you on your 1099-B, which will look something like this. So what is all this stuff on these forms? Here's what you need to know. If you sell stocks during the year, you will have capital gain income to report. On your 1099, your capital gains may be reported into one of 6 different categories. In the first section, you'll have information on short-term capital gains. These are gains or losses on sales of stocks that you held for 1 year or less. If we look more closely, we see that the section is further divided up into 3 categories. For Section A, or covered transactions, your broker will be reporting your cost basis to the IRS. That gives the IRS the information they need to do a direct match-up to what you report on your taxes. For Section B, or non-covered transactions, your broker does not have to provide cost basis information. They will just be reporting the total proceeds from these sales. Your broker may show Section B cost basis information on your 1099, but it will not be sent in to the IRS. Section C transactions are not reported as part of a 1099-B. Basically, any other transactions that don't fit into the first 2 categories, though they may be shown on your 1099 as supplemental information. And now don't get the impression that if something is not being reported to the IRS by your broker, that you don't have to report it. You still have the obligation to report correct capital gains and losses on your taxes. It's just that for sales included in Category A, the IRS has a very easy way to compare what you file with what you should have filed. There are similar categories in the long-term capital gains section. They are labeled D, E, and F. In Section D, cost basis is reported to the IRS. In Section E are the non-covered sales where proceeds, but not the cost basis, are reported to the IRS. And in Section F are transactions not reported for various reasons in either of the other 2 categories. You'll see these same 6 categories on the opening page of the 1099-B review report. The first thing you want to do is to look at the subtotals for each column in a particular category. They should agree with the subtotals shown on your 1099 for the same category. If they don't, each row label on the 1099-B review report is a link that will take you to the detail of what is being included in the category. For example, if I click on the first link, I get to the detail of the short-term capital gains, Section A category of basis is reported to the IRS. You can compare this to a similar looking detail page for the same category that you will find in your 1099. Start to focus in on where differences are coming from by comparing the subtotals for each company between the bivio and broker's report. If the subtotals are the same for a company, it is not the problem. If they do not agree, you will need to compare further details either between the two reports or between bivio and a realized gain-loss report from your broker to find out what the problem is so that you can get it corrected. Note that if you've done the audit in step 1, you should not find any issues at this point because you already found them during the audit and got them corrected. If you find discrepancies, you need to determine why they are there. If you need to make corrections in bivio, you can jump back to the transactions that have been entered for the stock when you select the Review Entries link. It will take you to the Investments Transaction page or pages for the stock in question. You will need to correct whatever bivio entry or entries were wrong to fix your problem. There could be many reasons for differences. If you do find them and you know the broker's information is correct, then you need to make corrections to your bivio transaction entries so bivio will calculate whatever the broker shows. In other words, you need to fix your accounting. You are not just changing a number on a tax form. Here are some things that can cause issues. You may have transactions missing. If so, you will need to find out what they are using statements and reports from your broker, and they will need to be added to bivio. You may find that broker cost basis numbers do not agree with your bivio records. If so, you will need to investigate and determine why, and then fix the entries in bivio that are causing the problem. Cost basis differences can be caused by things like the incorrect entry of a stock purchase. If you switched to bivio after your club had started, there may have been mistakes in your switchover data. The stock affected may have gone through a reorganization that wasn't accounted for properly in bivio either during the current year or in past years. And if you had multiple lots of stock and you only sold some of them, you would have needed to tell your broker which lots to sell. If you've told them something other than FIFO, first in, first out, you'll need to edit the sale in bivio so the correct lots are reported, sold, and the correct gains or losses are calculated. You may have had a wash sale. If it was this year, you will need to add it to your bivio records. Bivio is the only investment club accounting software that gives you a tool to use to do this. If you transfer stocks to pay a withdrawal, you may not have selected the correct shares as transferred when you made the withdrawal entry in bivio. Problems you find may be due to incorrect entries made during this current year, or they may be from past years. If that's the case, you need to fix the oldest problems first and then re-enter any subsequent transactions that would have affected the cost basis of your shares. Working from oldest to newest will allow the fixes to propagate through your data correctly. This can be a lengthy project if your records have been incorrect for many years. In very rare cases, your broker might have an error in a reported cost basis number on their 1099. If you can prove that they do have an error and that the gain or loss shown by bivio is correct, then contact us in support and we can help you make the entries you need to report this on your taxes. So that's what you need to do for step 3 of the tax preparation process. When you get done, you should have verified that bivio will report the correct capital gains and losses on your taxes and that they will be in agreement with what your broker will be reporting. Note that you should do this step now if you have your 1099 forms. The bivio 1099-B review report that you use to do it is available to you on the Accounting Reports page. And now, Becky's going to continue with the webinar and continue with steps 4 to 8.
Hi, everyone. Once you've done all these confirmations, you're ready to move into the final steps of preparing your club's tax forms. These go much quicker. First, you'll take a tax interview in step 4 to provide the final pieces of information you need to enter. Your club tax forms will be generated using your data after you answer a few questions in the partnership tax interview. If you later change anything in your club records after you went through this tax interview the first time, it's important to retake the interview to update the tax forms before you submit them to anyone. You can retake this interview as many times as you like, as long as you haven't e-filed your return. You only get to e-file your return one time. In the tax interview, first confirm basic club information: your club name, address, EIN number, and club start date. These will probably already be available and filled in from your club records. If not, click Edit to fill them in here because they're necessary for you to continue. If you update your club name or address here in the tax interview, the Notify IRS and supported states of club name change or address change boxes will be checked for you. Double check that your EIN number is correct. When your club electronically files your tax return, it's important that this information matches what the IRS is looking for. You need to choose from two options for filing your club returns with the IRS: either e-file or print and mail. We recommend the ease and security of e-filing when possible. If your club requires any of the state returns that are included in your bivio subscription, California, Colorado, Minnesota, New Jersey, New York, and Pennsylvania, they'll be available to e-file and perhaps also to print and mail. This is the form for a California return. California, New Jersey, and New York all mandate that returns be e-filed. IRS returns and state returns will be e-filed for these states unless a waiver is granted. Next, if you choose to print and mail the return, you'll be prompted to select the IRS center your return will go to and the type of partnership. And you'll also need to know whether or not your club is invested in a partnership during the year. If you have, you will not be able to finalize correct tax forms in bivio. You'll need to work with an outside accountant to get them done. If your club is not e-filing your federal return, make sure you check the filing instructions on our help page so you know where your return should be mailed. Here you choose the method that's used to allocate or divide up your club income and expenses between your members. We strongly suggest you accept the default, which is time-based allocation. This is the default IRS required methodology, and it means income and expenses are allocated to your members based on their ownership percentage on the date that the transaction occurs. If you're missing any addresses or social security numbers in bivio, you need to click Edit and enter them on the next page to be able to produce your taxes. Next, you're asked questions about the type of partners that are in your club, whether they are all U.S. citizens or resident aliens, and whether all of your members are individuals. If you have members in your club whose member accounts are listed in the name of a trust, it's important to select No to this second question. If you answered yes to both questions, you may be eligible to opt out of the CPAR audit requirements. CPAR stands for the Centralized Partnership Audit Regime. Here are the requirements you need to meet to opt out. You can't have any trusts as members of your club. You need to file your tax returns and distribute tax documents to your members by March 15th, this year March 16th, or file a valid extension before then. And your club can only have 100 or fewer K-1 forms to distribute for the year. We recommend that you opt out if you can. If you're eligible to opt out, you'll see this page. We suggest that you check this box to elect to opt out. We highly recommend you do so if you're eligible. It makes amending a return, if necessary, much easier. And if the IRS were ever to audit your club, it would be harder for them to do that. If, however, you answered no to either of the questions on the partner type page, because some of the members hold their club ownership in a trust, you'll be taken to this page. On it, you need to identify the members of your club that are trusts. You do that using the little drop-down menu in the entity type column. For most trusts, you'll select Trust Individual SSN on the drop-down menu that opens. Contact bivio support if you have questions about whether Trust Individual SSN or Trust EIN should be selected. When you have members who are trusts, you will not be able to opt out of the IRS CPAR audit procedures, and you'll need to designate a partnership representative. This is someone who's familiar with the financial activities of the club. They will have the sole authority to negotiate with the IRS and bind the club and its members to any agreement reached in the event of an audit of your 2025 tax returns. You need to enter the name, address, phone, and social security number for whomever you designate as partnership representative. If your partnership representative holds their club ownership in a trust, you'll need to enter their name in this bottom section. You cannot have a trust named as a partnership representative. Next, this is where you indicate if any of your club members are related to another club member. Now about Schedules K2 and K3. The bivio tax software will determine whether your club needs to file Schedules K2 and K3 and will automatically include the forms if your club is required to file them. Most clubs qualify to omit these forms, and you'll be notified here that you do not need to file them. However, you are still asked if you want to include Schedules K2 and K3. A few clubs may select yes and include the K2 and K3. Most clubs will want to choose no and save many pages of paper and ink. Refer to the bivio Taxes Schedule K2 and K3 Information Help page for more details. The third question is about digital assets, such as cryptocurrency investments. It should be marked yes if your club received any digital assets or if your club sold, exchanged, or disposed of digital assets during the year. It should be yes if your club owns crypto ETFs, such as GBTC and ETHE. Note that bivio does not support investments in crypto ETFs or other digital assets. If your club owns any of these investments, your tax documents prepared in bivio may be incorrect. Contact an outside tax professional to prepare your club's tax returns. If you have related members, the relationships you have to identify are listed at the top of this page. If related parties own together more than 50% of your club assets, it's called constructive ownership, and an additional form, Form B1, will be generated with your taxes. Investment clubs that can use bivio for their accounting typically are not involved in any transactions where the answers to this question will matter, but you still have to file Form B1. After you identify the first set of relationships, you'll be presented with the remaining club members to identify any remaining family relationships. You will keep being presented with these until you have no more to enter. If your club is in a state for which we provide state taxes, you may have a few extra questions to answer before you are through with step 4. There, after you've answered all of the questions in the tax interview, you've completed step 4 of the tax preparation process, and you'll be returned to the bivio tax page. In step 5, you can generate, download, review, and save a copy of your club's tax documents. Click here to generate your entire federal tax return. A single PDF file containing all of the documents you need to file with the IRS will be produced. Be patient, this may take a little time, especially if you have a large club. If your club files K3 forms, it will add 7 to 8 pages for each member for your return, and another 7 to 8 pages for Form K2 for your club. But most clubs won't have that again this year. When it's done, click the link to download the club's complete tax document file to your computer, and then click Return to the Taxes page. Next, click to generate and then download each of the state tax documents that are included with your bivio subscription. You can return to the taxes page at any point to repeat any of the steps. As we mentioned before, If you change any club data, make sure to redo your taxes before filing. However, once you've mailed or e-filed them and distributed forms to your members, you shouldn't make any more changes to the forms or to your club records for 2025 or prior years. You need to save a separate paper or PDF copy now of the return that was exactly what you filed. Keep it either in your club records or in your bivio files storage area for future reference. Now that your tax forms have been generated, you need to review what was entered on them. Your complete tax package will start with a cover page. You don't send this page in. It just contains instructions for filing your return and the date it is due. If there are any issues noted, make sure to address them before filing your taxes. Here's the first page of your 1065. It looks empty, but that's okay. Just make sure the information listed at the top looks correct. The main thing of concern on this page is you don't forget to sign here if you're mailing the taxes to the IRS or to any states. If you're e-filing, you won't need to worry about signing. Do this before mailing in your taxes, or those penalties we discussed at the beginning will apply to you. You should leave the Paid Preparers Use Only section blank. Schedule B comes next on pages 2 and 3 and 4, and it's where other information is filled in. Bivio has filled this in based on information you entered during the tax interview and with information that would apply to most investment clubs. You should review each question and the way it's been answered to make sure all the answers marked are correct for your club. Carefully review 2 questions on page 4. Question 30 should be marked yes if your club received any digital assets, or if your club sold, exchanged, or disposed of digital assets. It should be yes if your club owns crypto ETFs such as GBTC and ETHE. Page 4 is also where the partnership audit information is addressed. If you've elected to opt out of the IRS CPAR audit procedures, question 33 will be marked yes, and you'll also have a Form B2 that will be part of your tax package that you need to file. There will be no information in the partnership representative section. If you're not eligible to opt out, question 33 will be marked no, and the information about your partnership representative will be filled in here. Page 5 is Schedule K. This is where your total club income and expense information is filled in. This is the information that's divided up amongst the members and reported to them on their K1s. Most clubs will have only a few entries. Note that all entries you will see on our tax forms are rounded to the nearest dollar. Check to make sure that the entries are what you expect. If you see an entry on line 11, you need to check why it is there. You should only see an amount there if you have received some unusual type of club income, such as winnings from a portfolio contest. If you haven't, you may have recorded something incorrectly in your records, and you should investigate and fix it before finalizing your forms. On page 6, most clubs should only see entries in this top section. If your club has sold stocks during the tax year, you'll have entries on Schedule D. This is one of the places where the information from the 1099-B review process ultimately ends up. The summary information in the covered categories for which you haven't made any adjustments goes directly on the Schedule D. You'll not find it detailed out anywhere as part of your tax forms. If you've made adjustments, had wash sales, or have information for sales reported in categories other than the covered categories, you'll have entries in this section, and you'll also have pages of another form, Form 8949, filled in. That lists the details of your transactions, as well as any adjustments that were made between what the broker reported on the 1099 and what you are reporting as cost basis. There will also be some supplemental forms your club may have. For example, if your club has opted out of the CPAR partnership audit requirements, you'll have a form called Schedule B2. It lists all of your club members, their tax IDs, and the type of entity they are. For investment clubs that can use Bivio, these should all be listed as I for individual. If your club doesn't meet the domestic filing exception criteria, you may also have a 7 to 8 page Schedule K2 to file as part of your club's tax return. This covers information needed for foreign tax reporting, not only for your club, but also for each of your individual members' personal taxes. Most clubs will not have K2 or K3 documents. Some other supplemental forms which you may need to send in with your club filing are these. You may have schedules with lists of any items in special categories on your Schedule K, or a list of any distributions, withdrawals your club paid. If, when you identified your related parties, any of your related members owned in total more than 50% of your club, there will also be a Schedule B1 for you to send in with your taxes. As part of your tax package, you will have a form called a K1 for each member. It will report their portion of your club income and expenses. You file a copy of each one with the club return, and also you give each member the copy that contains their information. They need it to report on their personal tax returns. On each member's K1, you should see their name, address, and Social Security number. Don't forget to check this. If you file forms with any of this information missing or incorrect, your filing will be considered incomplete and possibly late, resulting in the late filing penalties we discussed earlier. The amounts shown on each line of this report will be the member's portion of your total club income and expenses that were shown on Schedule K. The codes for lines 11 and 20 can be looked up online if you need to know what they stand for. You'll find a link to the page of codes on a K1 attachment page or on our help page. A few clubs who don't meet the domestic filing exception criteria will also receive a K3 form for each member in addition to the K1. It will probably have 7 or 8 pages. Club members may need the information on this form if they have foreign income that they claim on their personal tax returns, even if there's no foreign income from your club reported on them. Again, make sure that each member's information is correct and complete on the pages of this form. Copies of all of these pages are given to each member and also filed with your full club tax document. There may also be a K1 attachment page for each partner. If your club is opted out of the CPAR audit procedures, there will be a note informing them of that. If they had any federally non-deductible portfolio expenses on line 13 of the Schedule K1, the code and description for what was reported will be listed here. Some states may still allow a deduction for these on state returns. Your club members will also see a notification here if your club qualifies for the domestic filing exception. It informs them that they need to contact your club's treasurer if the member needs a Schedule K3 for their personal return. In addition to a K1 form, a member who has made a withdrawal of cash or stock during the year may have additional tax liabilities. They'll need additional information that does not appear on their K1 to report on their personal 1040 Schedule D form if they had a gain or loss from their withdrawal. This information is shown on their withdrawal report. If they receive shares of stock, this withdrawal report will show their cost basis in those shares. It's important that they receive an updated copy of this report along with their K1 at the end of the year. Be sure to reprint all withdrawal reports at the end of the year. You do not have to send in the withdrawal forms with your club tax filing. Just keep them with your club records and make sure to distribute them to the affected individuals. And that completes the form review in Step 5. When you're sure everything is correct, you can proceed to Step 6 and file your return. You will either e-file or mail your federal tax return to the IRS. E-filing the federal tax return is secure and very easy and is included with your bivio subscription. We recommend it. If you've chosen to e-file your club's federal tax return, you need to review and electronically sign the e-file authorization. Click Authorize IRS e-filing of IRS Form 1065 to begin. Bivio will complete the e-file declaration form with your club's information. You need to review it. On the screen, review your club's filled-in IRS e-file declaration, carefully checking your club name and EIN number. All amounts in Part 1 will usually be zeros. Check the date. Read carefully all of the declarations in Part 2, and check the date and your role in the club. Your role is filled in from the privileges you have in the club roster. This person has administrator privileges in bivio. While bivio is submitting your tax return based on this authorization, bivio is not an ERO or a paid preparer according to the IRS. As such, Part 3 will be left blank. When you've carefully reviewed the IRS Form 8453-PE on the screen, the next step is to sign this e-file declaration electronically. When you're ready to electronically sign this form, to authorize bivio to start the e-filing process, full name in the field below the form, and click I authorize bivio to submit the club's tax documents. When you click this button, it can't be undone. It may take some time for this to complete. Wait and don't click the authorization link again. Let me reiterate this. Once you electronically sign the e-file authorization, the e-filing process will begin and cannot be undone. When you've e-signed the authorization, your club's e-file status will be pending until it's accepted by the IRS. You can check to see the status of your e-file submission here. And it's important that you click this link to download the club's signed e-file authorization form and keep it with your records. It will take some time for the IRS to accept your submitted tax documents. Don't wait until the last minute to e-file. If your club's e-filed return is rejected for some reason, any errors will show up here, and bivio will send an email notification to you. You have 10 calendar days to correct the errors and resubmit the corrected return. A return that is corrected in this period will be considered to be accepted as of the date of the first submission, even if the corrected return is resubmitted after the filing deadline. When the IRS accepts the e-filed return, the status will change from pending to accepted. Your federal return is now successfully e-filed. Then click these links below to print this page and save it with your club copy of the complete tax return in case you need the submission ID and acceptance date as proof of e-filing. Download and save the return exactly as submitted. And now that you've successfully e-filed your federal return, you can proceed to step 7 and your state tax return. But first, we'll talk about what you need to do if your club chooses to mail your return to the IRS instead of e-filing. Either mail your return or e-file your return, but do not do both. When you've downloaded and printed a copy of your club's complete federal tax return in step 5 and carefully reviewed it, click the Filing Instructions Help Topic link and the Where to File and 1065 Instructions link for all the details on exactly what to mail and where to send your federal return to the IRS. The Complete Tax Package link includes everything you need to send in to file your club taxes. This includes Form 1065, K1s, K2, any K3s, and all supplemental tax documents. Don't forget, sign the 1065 form on page 1. Make sure all Social Security numbers and addresses are entered and correct on the K1s, and if applicable, on K3s and on Schedule B2. If you mail them to the IRS, use both certified mail, so you have proof of your mailing date, and return receipt, so you have proof it was delivered. This is extremely important. The post office and the IRS are both overwhelmed and make many mistakes. Clubs have received large penalty notices for late or missing filings. You cannot depend upon a postmark if you drop them in a mailbox. Having these receipts is what is needed to prove to the IRS that you did file on time so you can get the penalties abated. Congratulations! You've now submitted your federal tax return to the IRS, either by e-filing or by mail. You can click here to download the tax document as filed for your club records. Now you move on to step 7 and follow the instructions about filing any required state tax returns. Some states require you to file state partnership returns as well as your federal returns. Included with your bivio subscription are state tax preparation programs and e-filing for California, Colorado, Minnesota, which is new this year, New Jersey, New York, and Pennsylvania. If your club needs them, state returns for these 6 states were automatically generated by bivio in Step 5. New this year, bivio offers e-filing for 2025 returns for all of these included states. For other states, we offer you a cost-effective option for having your state tax forms prepared. If you go to our Club Cafe page, you'll find 2 links on the right side that discuss state tax filing. The first will take you to this page with a table showing state tax filing requirements for each state. Use this to determine if your club has any state filing requirements. And the second link on the Club Cafe page will take you to this page, which describes a tax service option we offer and recommend if you need state taxes prepared and your state is not one of the 6 included in bivio. If bivio determines your club needs to file a state return for California, Colorado, Minnesota, New Jersey, New York, or Pennsylvania, you can now e-file those returns using bivio. California, New Jersey, and New York mandate e-filing unless your club has a waiver. Colorado, Minnesota, and Pennsylvania allow you to either e-file or print and mail the state return if you choose. After you've generated and downloaded and carefully reviewed the full state return in Step 5, click here to open the state e-filing authorization screens. When you have read and e-signed the state authorization page, this return will have been submitted. Here's how to do this. Each state e-filing authorization is different. Here is New York's. Read the instructions at the top of the page carefully. Review your club's state e-file declaration on the screen and carefully check any filled-in items your state authorization may have. When you're ready to submit the state return to be e-filed, type your name, click the box to agree with the certification, and click to authorize the submission. Once you click I authorize bivio to submit the club's tax return, the e-filing process will begin and cannot be undone. Your club's e-file status will be pending until it's accepted by the state. You can check to see the status of each e-filed submission here. It's important that you click this link to download the club's state e-file authorization forms and keep them with your records. It will take some time for states to accept your submitted tax documents, perhaps a day or 2 or more for some states. Don't wait until the last minute to e-file. After a state return is accepted, click this link in Step 7 to print the page as proof of the state's accepted e-file submission and to download the complete return as submitted. In some cases, the club may also have to file a return in other states where its members reside. To determine if your club has additional state filing requirements, refer to the bivio State Tax Requirements Help page. And now that you've filed your club's returns, it's time to go to Step 8 and give your members their documents. Check this box to allow club members with online access to log into bivio and print out their own copy of their tax documents. That's the safest and most secure way for them to get their K-1s. Members will see their own forms. Only the club treasurer, administrator, president, and vice president can see everyone's information. If members have made any withdrawals that have tax consequences, they will also find a link to their withdrawal report. If they don't download their documents, you need to distribute to each member a copy of the following from your club: their K-1 and a K-3 if it was generated, with all attachment pages, and also give them a copy of any withdrawal reports pertaining to them that you've reprinted at year end. Records you should keep include a paper or PDF copy of all of the forms in your complete tax package as you've sent them in, including the club's signed e-file authorization forms and the confirmations that the e-filed returns were accepted with the submission ID numbers. If you mailed the return, keep the proofs of mailing from the post office. There's a new link under the accepted return to download a copy of the return as filed. Keep copies of all withdrawal reports reprinted at year-end. The full transaction ledger, year-end valuation statement and member status report, brokerage statements and 1099s, an unrealized gain-loss report from your broker that shows the cost basis details for each lot of each stock you owned as of the end of the tax year, and a realized gain-loss report from your broker that shows the cost basis details for each lot of each stock that you sold during the tax year. You should keep these things as long as your club is in existence. Your current club records are still being affected by many things in the past. If you ever have questions about something, it may be important to look up some old information. You can easily store digital copies in your bivio files area. Note that you cannot count on your broker to save these things. The broker will only have historical information available to you for a limited number of past years. Another new feature in bivio is the opportunity to e-file a superseding or amended return with the IRS. Some clubs find they need to correct a previously filed return after they receive a corrected 1099 from their broker. You can click the link below the returns acceptance information in step 6 on the bivio taxes page to begin. The return must have originally been e-filed using bivio and your club opted out of CPAR. This is available for 2023, 2024, and 2025 returns. Contact us if this situation arises, even if your club doesn't meet the qualifications above, and we'll provide guidance. In summary, remember to keep your club accounting simple and your tax time peaceful. You can have a great club and comply with IRS regulations without any elaborate accounting knowledge. All you need to do each year is stick with basic investments, publicly traded U.S. corporate stocks. Check your records at least once a month to make sure they're staying correct and up to date. If you do so, preparing your taxes can be done with these simple steps. Verify your records, take a tax interview, print, review, and mail your tax forms, and distribute documents to your members. As always, if you have a question as you go through this process, email it to us at support@bivio.com. If your question is about reconciling your bivio records with your 1099, please email us a copy of your 1099 along with your specific question. Do not try and type details into your email, but do identify the stocks you have questions about. We can work on things most quickly if we can see what you're looking at. Thank you for joining us, and we're looking forward to helping you work through a simple and stress-free tax season.
Before we get to the questions, I have one observation to make. The post office changed its postmark rules in December. It used to be that you could rely on, if you dropped a letter in a mailbox or at the post office before the last pickup of the day, that it would be postmarked that same day. That is no longer the case. The postmark that is being applied now is the date and time that that piece of mail is first processed by automated processing equipment somewhere in the post office system, which could be days after you dropped it in a box. So if you're concerned about meeting deadlines, and meeting deadlines is critical when dealing with the IRS, the only way to be certain that you've mailed it timely, based on IRS rules and the new post office procedures, is to mail it certified mail, hand that certified letter over the counter to a post office employee, and make sure that they hand cancel the envelope that day.